UBS, that's a bank. They big. They just sounded the alarm, y'all. Not TikTok, not Twitter, a global investment bank, UBS. They just put the probability of a US recession at 93%. This is not me trying to get a headline. This is me trying to get you ahead of the line. Let me say something nobody wants to admit. America doesn't break in silence. It breaks in patterns. And right now, the patterns are loud. Foreclosures are up 20%. Household debt, highs in history. Unemployment rising, while companies are cutting tens of thousands of jobs and blame it on AI. And USB Bank just put a 93% chance of a recession on the table. But here's what people forget. The moment things look like they're at their worst is when the biggest wealth transfer happens. And so tonight, I'm going to show you what's happening. And I'm going to show you why it's happening. And then we're going to position ourselves for the next wave. Not to mention, we got NVIDIA earnings coming up Wednesday. So this is a powerful week for us in the market. So before we get into this video, man, y'all know the routine, man. I need you to like, I need you to subscribe, and I need you to share this out. Help us get to 2,000 likes, man, because that really helped the channel go. And make sure you comment and tell me which part of this that you like the best. Now, I will say last Sunday's video, y'all really showed me that y'all like when I do these Sunday recaps. So I'm not going to waste your time. I'm going to really lock in and give you a bunch of information that you can really use as we move forward, because my goal is to help you turn your last name to an asset. Let's get to it, y'all. Let's go. So let's start with reality and not headlines. Foreclosures jumped 20% in 1 month. That's right. October gave us 37,000 homes sliding into default. And if you zoom out over the last 8 months, that trend is undeniable. Homeowners are really having a hard time right now. And it's not because people just suddenly became irresponsible. It's not because systems just are unaffordable. Like, let's think about it. Here's the data. Household debt is at 18.6 trillion. Mortgages, 13.1 trillion. Auto loans, 1.7 trillion. Student loans, 1.7 trillion. And credit card debt, 1.2 trillion. Americans aren't just overspending. America is overpriced. I'm going to say that again so you all can really hear what I'm saying. Americans aren't just overspending. America is overpriced, just like a lot of stocks in the market right now. And so we got to do something about it. When buying a house requires 2 incomes and keeping the house requires 3, something is fundamentally wrong. Now, when people get squeezed financially, or when they feel like that, man, they stop dreaming. And when you stop dreaming, you stop planning. And that's how opportunity slips through your fingers. It's been called the American dream, y'all. Why? Because people dreamed the way they wanted their life to be. And then America actually provided a way for you to go get it. But the pressure isn't only on the household, y'all. Corporate America is signaling something bigger. Something really bigger. And for me, I'll be honest, we keep hearing people talk about, yeah, well, the jobs are going to be in plumbing. And we hear them saying, yeah, well, the jobs are going to be in this, and the jobs are going to be in that. And that's true until the time comes when they feel like, well, we can get robots to do that too. Because the one thing we know about America is they're going to keep progressing. They're going to keep moving forward. They are at odds with China. And we see China just releasing robots by the thousands. And so what is America going to do? They want to keep up with this race. Something hit us really hard this week when we heard CEO Jensen Huang of the company NVIDIA, who reports Tuesday, say America will lose the race to AI to China. And that shook the market. We've seen the headlines, y'all. We've even seen Walmart, the biggest employer in America, announce that they will be going on a 3-year hiring freeze. Tech companies are cutting tens of thousands of jobs. Retailers are quietly removing positions. And logistic companies, man, they shrinking staff. The excuse? The words you keep hearing in all the earnings? Efficiency, restructuring, AI integration. But here's the truth, man. It costs to survive. And so the one thing I know as long as I've been in the market is we are going to keep seeing companies do their best to keep profits up. And one of the ways that they keep profits up, matter of fact, let me bring that back. 3 ways that they keep profit up is 1, you cut people. 2, you increase prices. 3, you shrink stores. And this is how you do it. You cut people, you raise prices, and you shrink the stores that you have so you can build that bottom line up. And the fourth way is they make investments outside of their company. Now, the easiest thing for them to do is blame it on being bloated. Now, AI didn't start the layoffs. It accelerated decisions that companies were already scared to make. Walmart even said it. Every job we have is going to change. Now, I want you to understand something. Walmart is the biggest employer in America. So when they come out and say something like that, that's not a threat, y'all. That's a roadmap. Automation isn't coming. It's already here. Like they triggering the button to just let people go by their head count. So before the recessions hit, not after it hit, y'all. Now, when a system removes its workers, it creates winners and losers. And winners are always the ones who understand the shift early. And that's what I want to do, y'all. The biggest signal, y'all, doesn't come from the companies. Like, let's put that in our head. It comes from the people who bet billions on the market. That's right, y'all. It don't just come from the company itself. It comes when we listen to the earnings, and we can look at the market, and the market can tell us something. UBS, that's a bank. They big. They just sounded the alarm, y'all. Not TikTok, not Twitter, a global investment bank, UBS. They just put the probability of a U.S. recession at 93%. This is not me trying to get a headline. This is me trying to get you ahead of the line. Because unemployment, it's creeped up from 3.4% to 4.3%. It's not random, y'all. That's momentum. In recessions, they usually start when unemployment crosses 4.2 and keep rising. Now, I won't say something. When we think about recessions, nobody can really say like when it's going to hit exactly. But here's what we do know. They always catch us off guard. And the people on Wall Street already know what's happening. They see the numbers, so we can see it. So we got to start seeing patterns when we start, like, if you look at recession indicators, like one of the things you start seeing is a lot of stores start to close down. Well, we seeing that. We seeing stores like Wendy's. We seeing so many different stores close down, thousands of stores. Then we see jobs start going away. Then we start seeing what? Things start going on sale. We see companies start laying off a lot of people. Why? Because they're trying to keep profit, because they got to keep up with the spend that they're trying to do. And one thing that companies do, and I'm going to tell y'all something that I really know is the truth, yo. Anytime you listen to companies that's on the stock market, notice what you always hear them say: shareholders. We got to do whatever to keep our shareholders happy. In the stock market world, this is how it goes: CEOs, shareholders, then customers, then workers. And I'm going to be real with you. These cuts and what we see right now, I just want us to be prepared. Like, I'm not the person to ring the alarm because I don't know what's going to happen. It can happen a year from now. It can happen 2 years from now. It can happen 3 years from now. But here's what we got to understand, y'all. Recessions are part of the economic cycle. It got to happen, y'all. It has to happen. And there's no better time right now when we're seeing debt at $38 trillion. I'm just saying, $38 trillion in debt. The dollar is consistently losing value, right? We see a president that's saying like, yo, we might have to do a 50-year mortgage. I'm going to be honest with you. At first, I was like, man, you out your mind. But I'll be honest with you, yo. Like, and I want y'all to not to crucify me for this when I say this, right? It looks really bad on a country when people can't afford to live. Now, has Donald Trump added to the goddamn on debt? 100%. Has every president before him consistently added to the debt? 100%. I don't know how we get $38 trillion down. Nah, they are saying like this, we got to go to court for these tariffs. If they saying they're going to use some of the tariff money to pay down debt, but if the tariffs are not legal, that's going to bring a whole nother situation to the markets, because we don't got no $90 billion or whatever that was to pay all that back. We already $38 trillion in the hole. We can't win. So I'm not saying that the 50-year mortgage isn't insane, But one of the things you gotta tell people is that they can live, right? And so when the price of renting is cheaper than home is better than home ownership, then you have a serious problem, right? And it's kind of like two evils, right? Like it serves a purpose, but it hurts the person anyway, right? And so it's just a hell of a situation for us to be in, right? But here's what I will say. Adding thousands of AI job losses, slower consumer spending, the housing stress, the pieces to the puzzle, like we don't gotta guess. We see them right before our eyes. So here's where the story turns. Because policy determines pain. And I always just want to tell a story so you can see what's going on. The government shutdown, well, that got ended. And Congress went to the edge, right? Government workers were days from missing out on another set of paychecks. Air travel was already collapsing, thousands of flights canceled going into this part of the year. We talked about that last Sunday. Food insecurity is rising. Small businesses are really choking. Republicans had 53 seats, Democrats had 45. 8 Democrats crossed the aisle and said, yo, we got to put this through. Now, I'm not here to say it's right or wrong, but I'm not for people like not eating. You know what I'm saying? Why? You know, these healthcare premiums that was tied to the Affordable Care Act, well, they about to jump 30%. And we talked about that. The compromise, well, the Senate promised to do what? Vote on Obamacare next year. No pass, just vote. Just vote on it. And if that vote fails, then we face another shutdown early 2025. And then we got a Fed that's cornered. The Federal Reserve is really in a vice grip right now, right? They wanted to cut rates in December. They hinted they were ready to, but now that probability has flipped. Right now, the markets show a 55% chance that the Fed pauses instead of cutting. Now, what does that mean? I'll be honest with you. That rate pause will make the market bleed. Not collapse, but it's going to bleed. Because a pause, well, that tells investors we don't think the economy is stable enough or weak enough to act. Now, that's crazy. That creates uncertainty in the market. And markets hate uncertainty, especially a market that's looking for a catalyst to go higher. And we don't have that catalyst. We don't get that Santa Claus rally. We don't get that Santa Claus rally. We don't close the year strong. And history shows something wild happens after a government shutdown. You wanna know what that is? Well, to all my Bitcoin people that really love Bitcoin and that really enjoy Bitcoin and who are Bitcoin advocates, well, here's the pattern. The pattern is the last time the government reopened after a pause, January 2019, Bitcoin exploded more than 300% in 5 months. Will that repeat? Nothing is guaranteed. History doesn't repeat itself, but it often rhymes. And so, shutdown ends, confidence returns, liquidity loosens, rising assets bounce. But the real message, well, I don't really think it's about Bitcoin. I think it's actually bigger than that. I think there's more. I think there's more to that. And the reason why I say there's more to that is because this. Most people don't hear until it's too late. Recessions don't destroy wealth. Recessions transfer wealth. Transfers from the emotional to the informed, from the reactive to the prepared, from the panicked to the patient. If you can lower your expenses, y'all, increase your cash flow, build discipline, and invest through the fear, you will come out on the other side of this ahead of everybody who was frozen. So I'm not saying recession because I want you to be scared. I'm saying recession because I want you to be prepared. This moment isn't comfortable, but comfort never built wealth. Now's the time to get serious. Now's the time to plan. Now is the time to study. Now is the time to invest with intention because the people who move during this uncertainty, man, they will own tomorrow and you will own. You will buy back your freedom. So I'm going to say something to you. This season, you only buy assets, you only buy access, and you only buy information.